Happy Friday, traders. It is 8:01 a.m. Chicago time on the 27th of September, 2019. Thanks for joining me again this morning on episode number 1605. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market stance appears to be mixed-ish to allocating to risk again. Yesterday we opened, even though we were, well, yesterday was kind of mixed with a slight allocation to risk. It actually was mixed. We ended up dipping and testing lower in the indices before climbing into the close on a neutral day. I'll cover that in a minute. But this morning, it looks like the DAX is a leader, up 102 points or 0.84%, along with other indices. The S&P is up 8 points from yesterday's settlement. The laggards crude falling fit to 55.37, falling an entire dollar, and gold is off almost 15 bucks. So clearly today the market's feeling pretty good about risk and is allocating to such. So that's what we're looking at in terms of what we've got on the calendar. We did have the Eurozone business climate that came out at 5 a.m. Eastern time. Came in much worse. The consensus was for 0.11. It came out at negative, double that, negative 0.22. We had in the US durable goods, personal spending, and personal income. Durable goods were actually better than expected, with personal spending being worse and personal income being in line. The only thing that's left is Michigan sentiment. We do get the final number for September at 10 a.m. Eastern. It's a half hour after the open. And this number, the prelim can be a surprise. The final generally is a low impact figure. We do have Fed's Harker speaking at noon. And, a lot of the Fed speakers were out on parade this week. That's where we stand. What is the theme driving the market today? The theme for the market today really, there's some stuff with the Bank of England. Um, uh, a hawk named Saunders says a rate cut may be added due to Brexit uncertainty. For Brexit, UK Prime Minister Johnson wins Belfast, ruling that no Brexit deal would not violate the Good Friday Peace Accord. But overall, I'm going to tell you that there isn't very much going on here today in terms of the theme driving the overall market. Data is just mixed, and the news flow is pretty quiet. I think POTUS, the president of the U.S., is distracted with this impeachment stuff. We do have a few things out of the Iranians. Iran's President Rouhani says U.S. offered to remove all sanctions on Iran in exchange for talks. He's basically claiming that the U.S. is making a big concession, basically a point of weakness in the negotiation. Let's take a look at what was expected yesterday. The primary scenario yesterday, the green, the primary scenario is for responsive selling. Was looking for responsive selling down into 2974-ish and potentially 2974-ish. That's the high volume node as I drew here. You can see it in green. I drew the high volume node as the next potential area to test it, and I was looking for a bounce on the way up. Now, that's what happened, but the drop was a lot deeper than I had anticipated. Let's see if we can see it. It's tough to see in there. Here it is on the 15-minute. Let me turn the stock zones off. In fact, let's turn pretty much everything off. So here we see it, an immediate move down. This is the high volume node that was expected to be tested, and that's where we consolidated for a little bit. Pretty much the morning we dropped immediately into this high volume node, so we are in this zipper zone. consolidation zone from Wednesday's bounce, which also outlines the pullback zone from the sell-off day on Tuesday. And overall, what we see here is the market consolidating, and then it let go for about 10 points lower before it bounced back up. The profile shows that it liked the middle range here, but there was a fair amount of price discovery across the entire profile. It's not blunt, but it's not showing a traditional rejection at the top and rejection at the bottom type of thing with balance. The market's not finding balance just yet. So that's where we left it. When we look back, this is the overall formation that we're dealing with. We have this consolidation down below. Just to, it's good to step back and kind of look at things plain and simple. Oops. And this is the next consolidation. This is the next box up top, and so on and so forth. There's a box in here, and then there's a box in here where we held yesterday. You can see that the market's in a clear price discovery process here. We are remaining inside of the overall. We are remaining inside of this kind of a big zone that is made up of this composite, this micro composite that I drew in yellow. Let me change the color on it a little bit just to make it more obvious in case you can't follow along because there's so many. Let's make it a blue and let's put it out farther into the profile. So if we look at this profile here, it's now very, very obvious. This is a profile of all volume at price using tick data. And again, we've got this 3004, 3005, 2991.50, and then we have what is blunting now, this 8150 area, which is important. It's the high volume node down below, but it's getting blunted at 87 and then 76. You can see that there's actually more volume now at the 76. This area is representing a lot of balance down here. This whole section that we're in is representing an area that the market's really liking. Again, as long as it stays below that 91.50, 91.75, we are likely to be stuck in this area of the profile. So if we expand this out a little bit, we can see that a lot of volume is going off here, and it's relatively blunt, and that's the area that we're battling in right now. Just keep an eye out. The overnight high pushed to 93. There was a slight poke there. Just keep an eye out for what happens when we get up to 91.75, and if we're able to take it over, then the next key area becomes the point of control, which is marked in black here, which is a 3,000 level. So if we push through above 91.75 and have a weak pullback, start to rotate up, then we're good for about 10 points to 3,000 at that point. Okay, so that's how things look in terms of what's happened so far. Here's the overnight session. The overnight session is initially responsive. And then we get to the 7150, which is actually a level that comes to us from last week. This 7150 area. Well, this is a mixed session. I can't look at it here, but it consolidated between 72 and 77, and then we broke higher, and we have what looks like a shelf and a weak high. We are above the point of control and VWAP for the session. This looks like it is likely to continue higher. I would caution shorts early on. The inventory is mixed overnight in price and positive in volume and aggressors. So I would say that if you're looking short, keep it light and tight. Keep it light and tight. We're likely to attack higher this morning. The order flow this morning, not much in the way of action. Here it is. Loop. Here it is. Look at that map. It's mostly dark even when I take out much volume from yesterday. We don't see any real bright areas. Hang on. We don't see any real bright areas until the low that was put in the overnight session at 71 or so. It's not a pretty picture in terms of active trading overnight, in my opinion. It's just not conducive to today. Is likely to be a pretty kind of summer trading type of day, in my opinion. As I take out the day session volume, again, you see that right underneath the overnight low, we have the 71 liquidity that's been here throughout the session. We've had liquidity up at 90 and 92, and we took some of that out before coming off. Above there, above the overnight high, there's 94 and 98, and of course, the 3000 is going to have a lot of volume, and this volume's been sitting here for a long time. That's expected to trade out. Again, it's a major strike. It's a millennium figure. So that's what the overall picture order flow picture looks like in the overnight session. Again, not expecting very much this morning in the way of action. Let's look at what we're expecting today. Of course, you all know as this is Friday, I'd like you to take a moment to hit the like button. It is like Friday. Every Friday is like Friday. Find the like button if you're on YouTube. It'll require you to log in. Hit the like button. It helps people find the channel. All right, so what do we have today? So let's put the stock zones on. These are the key reaction areas expected. Basically my homework here, I'm sharing freely with you. I'm expecting an open auction at the open. I'm expecting an attempt to revert back to around 84, 85, but I'm looking for this high to be taken out this morning, and I'm expecting the market to consolidate here at the 91.75, only to push through this 93 and start working its way up to the 3,000. We may see 3,000 today, but I'm expecting pretty sluggish action. It may not get it, but I'm looking for the market to be small, responsive, and start to push higher. That's what I'm looking for as the primary scenario. Now, if that fails, if we do push higher and fall back in, especially with an impulse, then look for the point of control is the key target below. Again, 81.50 expected to consolidate, and then look for it to spill down into 72.50 and into 71 before it bounces back up. Those are the two key ideas, most likely scenarios, or the main trades of the day. That's where we stand right now. Let's cut it off there. I wish you, of course, the best of luck. It is a reminder that it's Friday and it's not a great day to bet big or to bet a lot and go into the weekend with a big loss. Trade within your capabilities. If you don't know what those are, then switch to a simulator, take at least 50 samples with your plan and make sure you have a positive edge, a deep positive edge of at least a few ticks on average per contract before going live again. If you're going live and you're still not consistent, I urge you to trade a micro product as opposed to a full product if one is available. The cost is not relevant. It's the losses that we want to protect ourselves from. Good luck today, and I'll catch you on Monday morning. Take care.